Welcome back to Bong, Laureate, and this is Ms. Suman. Today I'll bring to you SSC CGL 2017 Tier 2 Paper 4 Part 3. But before that, let me remind you something. Please don't forget to subscribe after watching this video. If you like this video, please give me a thumbs up and don't forget to share it with your friends and beloved family members. And if you have any query or anything you want to know, then please comment. You can also reach us through our Facebook page. Please do visit it. And some of you asked me to give you some study material or notes so that you can prepare by yourselves and also can discuss it with other aspirants. So today I promise you I'll start giving you notes and study materials once I reach 1000 subscribers. So please do subscribe if you like my channel and help me to help you back. So let's start our video today. Ledger is nothing but a summary of all the financial transactions account-wise. In accounting, it comes after the preparation of journal. It has all the accounts listed in it and each account has a debit side and a credit side. The debit side is written on the left-hand side and the credit side is written on the right-hand side of the account. So here we can see 6 accounts are listed. Now let's see how these 6 accounts were created. So in the journal, we can see in the first transaction, there is 2 accounts mentioned. First is purchase account. So in the ledger, we have created a purchase account and then there is a cash account. So in the ledger, we have created a cash account. Then in the second transaction, there is a furniture account. So in the ledger, we have created a furniture account and there is a cash account, but cash account is already created, right? So we don't have to create it again. In the third transaction, there is a cash account which is already created and a sales account. So we created a sales account. In the fourth transaction, there is a salary account. We created a salary account and there is a cash account which is already created. Then in the fifth transaction, there is a rent account. So we have created a rent account and there is a cash account which is already created. So there is total 6 accounts. Now how the debit side and credit side is maintained? So let's see. To understand how the ledgers are prepared, you have to know a simple theory. The theory is whenever some account is debited, it is debited to some other account, and whenever an account is credited, it is credited by some other account. So whenever an account is debited, it is debited to, and whenever it is credited, it is credited by. Alright, so now we'll start. So in the first transaction, purchase account is debited to cash account by 1000 rupees, right? So in the purchase account, we will write on the debit side to cash 1000, and at the same time, in the first transaction, the cash account is credited by purchase account by 1000 rupees. So we will record that too. So in the cash account, on the credit side, we will write by purchase 1000. Okay, now in the second transaction, on 5th October 2001, furniture account is debited to cash account by 2000. So in the furniture account, we have written to cash 2000, and at the same time, cash account is credited by furniture account by 2000 rupees. We have recorded that also. Now in the third transaction, the cash account is debited to sales account by 50,000 rupees. So we have recorded that in the debit side of the cash account to sales 50,000. At the same time, the sales account is credited by cash account by 50,000 rupees. Alright. Now the fourth transaction says salary account is debited to cash account by 5,000 rupees. So we have recorded that, and at the same time, cash account is credited by the salary account by 5,000 rupees. We have recorded that. Now in the fifth transaction, the rent account is debited to cash account by 3,000 rupees, and at the same time, the cash account is credited by the rent account by 3,000 rupees. So these are all the transactions that are needed to be recorded. Now we have to understand how balancing is done for an account in any ledger. If there is a deficit in the debit side of an account, then to balance carried down is written and the deficit amount is put there. And if there is deficit in the credit side, then by balance carried down is written and the deficit amount is put. After that, the deficit amount is written on the side that has a surplus with the prefix brought down. If the surplus is on the debit side, then it is written to balance brought down, then the surplus amount is written, and if the surplus is on the credit side, then by balance brought down, then the surplus amount is put. That is how an account in ledger is balanced. Now we will check the accuracy of the ledger by producing a trial balance. For that, we have to go to the next slide. Here we are seeing a trial balance. It has 4 columns. First one is for the serial number, second one is for the name of the account, the third one is for the debit amount, and the fourth one is for credit amount. So the first account is purchase account, and if we check the ledger, then we will see that the purchase account had brought down balance of 1000 in debit side. So we will write 1000 on the debit column of the trial balance balance for purchase account. Then there is cash account. For cash account, the brought down balance was 39,000 and it was on the debit side. So we will write it on the debit side of the trial balance for the cash account. For furniture account, similarly, debit side brought down balance was 2,000. So we will write it in the respective column. And for the sales account, the brought down balance was in the credit side and it was of 50,000. So we will write it down on the respective column. In the same manner, the brought down balance for salary account and rent account is also recorded. And if we check the total of both the debit side and the credit side, it will be equal. And that means that the ledger was totally correct. If there was a mismatch in the debit side total and the credit side total, then we would have to check the ledger again. That was all that we needed to know about the journal, ledger and trial balance. Now we will go to the previous year's questions and examples. So let's go. Okay, the first question for today is withdrawal of goods from stock by the owner of the business for personal use should be recorded by option number 1 is debiting stock account and crediting capital account. Option number 2 is debiting capital account and crediting drawing account. Option number 3 is debiting drawing account and crediting stock account. Option number 4 is debiting stock account and crediting drawing account. So to answer this question, we have to know first what is stock account, what is capital account, what is drawing account. So stock account is the account which holds the record of all the stocks of a business. Capital account is the account that records all the contribution from the owner towards the business. Drawing account is the account that records all the goods withdrawn by the owner of the business from the business stock. So I think you have already decided the answer, and it is option number 3, debiting drawing account and crediting stock account, because stock is a type of asset and the assets are considered real account. So for real account, the golden rule is debit what comes in and credit what goes out. So the stocks are coming into the drawing account and it is coming out from the stock account. So the drawing account will be debited and the stock account will be credited. Okay, now the question number 2 is which of the following is true? Option number 1 is bank account is a personal account. Option number 2 is stock of stationery account is a nominal account. Option number 3 is return inward account is a personal account. Option number 4 is outstanding rent account is a nominal account. Now you already know that bank account is a personal account because I already discussed that with you, right? So we know that option number 1 is a correct answer. So we don't have to check others. Now we'll go to the question number 3. Question number 3 is after the preparation of ledgers, the next step is the preparation of option number 1 is trading account, option number 2 is trial balance, option number 3 is profit and loss account, option number 4 is balance sheet. So we already know that after preparing ledgers, for checking its correctness, we prepare trial balances. So the option number 2 will be right answer. Question number 4 is which of the following is true regarding trial balance? Option number 1 is if trial balance tallies, no transaction is omitted. Option number 2 is a trial balance does not tally if a transaction is omitted. Option number 3 is it is mandatorily prepared to ensure the correctness of balance sheet. Option number 4 is a trial balance is a summary of all the ledger balances outstanding on a particular date. So we will check all the options one by one. If trial balance tallies, no transaction is omitted. Tallies means matches, means the debit side and the credit side of the trial balance will match. Okay, so it says that if trial balance matches, no transaction is omitted. But you can check for yourselves that even if we omit some transactions from the record, the trial balance will match. You can check it for yourselves. Okay, now option number 2 is a trial balance does not tally if a transaction is omitted, but it does. Option number 3 is it is mandatorily prepared to ensure the correctness of balance sheet. It is not prepared to ensure correctness of balance sheet. It is prepared to ensure correctness of ledgers. And the option number 4 is a trial balance is a summary of the general ledger balances outstanding on a particular date. So ledger balances outstanding is the brought down balance. So it explains actually what trial balance does. It is a summary of general ledger balances outstanding on a particular date. So it is a true statement and this is the correct answer. Now the fifth question is the receipts and payment account for a non-profit organization is a option number 1 is nominal account, option number 2 is real account, option number 3 is income statement account, option number 4 is financial account. I will answer this question next day. I assure you that this is not a wrong question. The question is fully correct, but I will answer this next day. Thank you for watching this video. In the next video, we will cover the single and double entry, book of original entry, bank reconciliation, and rectification of errors. But let me tell you that this video will not come before 10th September because I am planning on covering a few topics on English and mathematics. Because the bank exams are knocking at the door, and this will also help you guys in the Tier 2 exam for paper 1 and paper 2. So stay tuned and be with us. So if you think this video will help you, like this and share this, and if you have any suggestion or any kind of request, please let me know. I'll try my best to bring the best material to you, and don't forget to subscribe. Thank you all.